Welcome to Money Talks Media. I'm your host, John Klotz. Welcome to our bi-weekly segment dedicated to growing your money in and around the GTA. And we've lined up a serious roster of speakers, including tax accountants, lawyers, entrepreneur, money managers, hedge fund managers, stock pickers, stock analysts, you name it, we got it on this show. Money Talks Media is proudly based on the public speaking series Toronto Talks, now in our 10th year as a public speaking venue. And we encourage you to come out and attend our events. You can check that out at torontotalks.org. And we've got a great event coming up on Tuesday, March 28th, featuring Jury Trubasky. And he's an entrepreneurial coach going to be showing you the art of making rain. And if you're self-employed, this is a must-see. You have to learn how to line up that next client and get them to walk through the door. So again, you can check that out at torontotalks.org. And if you're listening to the show, you can attend free of charge. Otherwise, we charge $20. All our proceeds go to a charity, Camp Uchigeas, a camp for children with cancer. Money Talks Media is proudly sponsored by Partners in Planning Financial Services and Northwood Mortgage Life. Let us show you how we can take years off the life of your mortgage and create a tax-efficient retirement plan for you. You can go to our website at northwoodmortgagelife.com and request our newsletter, and we'll send you all our secrets. As well, you can call us at the office at 416-969-8130 and request us at northwoodmortgagelife.com. Little caveat, if you missed one of our shows, by the way, you can check that out at moneytalksmedia.com. And we've got about 70 shows all on ice for you. And again, our caveat is you are going to be receiving some free advice. Always speak with your financial advisor, lawyer, accountant before you make a move on anything, because we are limiting our liability, and it's a great show, lots of great advice. But again, always speak to your financial advisor, lawyer, accountant before making a move on anything. Now, let's get on with the show. Today, Money Talks Media talks tax tips and tax talk with our good friend Stephen Chong, chartered accountant. Welcome aboard, Stephen.
Thank you, John, for inviting me back.
This is great. You know, you're a pro at this point. You've been here a zillion times, and you know.
Well, I'm here a zillion times because you are so kind to invite me back.
Well, absolutely. I want to tell a little bit about you. So, and I know, like I said, you've been on our show before. You have been a practicing accountant since the 80s.
Yes.
And a very serious practice. And I know because I go by your office all the time, and I see how busy it is in there.
Right.
So you're obviously doing something right.
Well, the thing is, it's the basics, John. Work hard, do the best for your clients, stay on top of the changes in the tax laws to help your clients, and you know what? They'll keep on coming back.
Yeah, that's a good attitude. So today we're going to talk about getting ready for that tax return. Now, it's a really funny time because, like I said, you know, RSP season is coming to a close. People have made their contributions, and now they're actually starting to think about that tax return they actually have to do for April.
Absolutely.
And I thought it would be good to bring you in and to talk about some of the things you need to do to prepare for that, and some of the things you can do to make it a better tax return than ever before.
I think that should be that's what we're going to talk about. The thing is, okay. For most people in Canada, the tax filing deadline is April 30th.
Yes.
If you are self-employed without a corporation, your tax filing deadline is June 15th, so you have some more breathing room.
Okay.
This time of the year, all taxpayers should be starting to receive all the tax slips that are applicable to them. If you're employed, chances are you've already received your T4. People with bank savings accounts and investments and shares, they should be receiving their T5s. Once you buy your RSP, which the deadline is March 1, you'll be receiving your RSP slip. Another common slip is called the T3. That summarizes the investment income if you have mutual funds or you're a beneficiary of a trust. Now, those don't come out till the end of March.
Right.
People should be aware, open their mail, sort out their slips, put them in an orderly fashion for their tax preparer, accountant, or for themselves.
So what are some, and that's obviously, I mean, and I know because I've been receiving all my T4s and T3s and all that sort of stuff. What are some of the things people need to really, you know, once they've accumulated all these things, what are things they can do to really get ready for this year's tax return and make it more effective? What are some of the reminders that you might want to consider throwing at them?
Well, especially if you're submitting them to your accountant. The thing is, the accountant, if you want to save on the tax preparation fee, the taxpayer themselves should spend some time sorting out their information.
Okay.
When you get all these information in the mail, sometimes there's advertising flyers and empty envelopes. Well, you know what? The accountant doesn't want to see them.
Yeah.
And when it comes to putting up your deductions, Revenue Canada does not accept a returned canceled check as a valid evidence of their deduction.
They need a receipt.
They need an actual receipt. So you scurrying around submitting your canceled check to your accountant is not going to be helpful at all.
Yeah.
Some people have rental properties. And again, if you were to summarize for your accountant the 12 months rent, 12 months expenses in property taxes, repairs and maintenance, submitting the mortgage interest. Now, the mortgage interest is not the total mortgage payment, I think, as you know already.
Yes, I do.
The thing is, your mortgage company would have submitted to you an annual statement that separated the principal and interest, because only the interest is tax deductible. Other things will be the insurance on the property, utilities, property management, and any other expenses directly related to that property. And if that person were to summarize it, then that'll be a quicker tax preparation procedure for the preparer and a lower fee to that person.
It's kind of like going to a lawyer and having your will pre-prepared. Obviously, you're making it easier for the accountant.
Good analogy.
Yeah.
Good analogy. And you know what? The more homework you do, the quicker it is for the tax preparer to prepare the tax return at a lower fee.
Right.
Self-employed people without a corporation, again,
Yes.
if you were to summarize your income and expenses in advance, that will cut the fee. And the thing is, because we're in a global economy, some people do incur expenses outside the country, most commonly United States.
Let's talk a little bit about self-employed, what they can do to, because that's a whole subject unto itself. What
Yes.
some of the things they can do to help reduce taxes.
Well, for one, if you are incurring expenses outside of Canada, you should summarize them separately from your Canadian expenses.
Okay.
The reason why, you may have to do a foreign currency translation on those. Also, there's no GST, HST incurred on expenses outside of Canada. If you are filing your HST, GST, you want those expenses separated to be easily identified to prepare your GST, HST return. I've been emailing to my clients a schedule called the T2125 form, which is the form used by Revenue Canada to summarize your income and expenses. And there's specific expense categories prescribed by Revenue Canada. And I've been emailing that to my self-employed clients as, look, please summarize according to these categories. Again, doing your homework before you see your accountant will save lots of time.
What other things can self-employed people do to reduce their taxes and have an effective...
Self-employed people, some of the things that they might miss or may not be fully aware of, they can buy a private health insurance plan, and that private health insurance plan will be totally deductible against their self-employed income. A lot of self-employed people may not be aware that if they're operating out of their home, that the desk they buy, the computer they buy, the printer they buy are business expenses and can be subject to either a complete deduction or depreciation over time.
Now, what percentage of their time do they need to be spending working out of the home?
It all depends, because everyone is different. Some people are self-employed on a part-time basis. Some are self-employed on a full-time basis. That is critical when it comes to evaluating things like your car expenses. Revenue Canada would like you to do a self-analysis, a self-assessment as to what is the percentage use of your own car. If you're using your car half for business purposes and half for personal purposes, then you're entitled to write off half your car expenses. And if you are a small business working out of your home, you are entitled to a fair percentage of your home expenses, which can include a percentage of the mortgage, property taxes, insurance, repairs, security alarm, telephone. In a very simple example, the rules for a home office, it should be your primary place of business. Mm-hmm. If you already have an office location that could be considered primary place of business, the home office may not be accepted by Revenue Canada. If you do have a home office, if it is your primary place of business, the home office the rules are it has to be separate and distinct and used on a regular basis for meeting your clients. The term separate and distinct basically implies a separate room.
Okay. Let's carry on in terms of things people can do to get ready for the tax return. And,
sure.
You've mentioned here, actually you've given me a list.
Yes.
Capital gains and losses. Go ahead.
Capital gains and losses, the simplest thing you can do is get your annual summaries from your investment broker.
Okay.
Most investment brokers now are summarizing your gains and losses, and it's all on your statement.
Right.
You don't have to worry about your individual transactions. Get that broker statement and annual mutual fund statement.
And give it to your accountant, and they can summarize it.
Absolutely correct.
Okay. Childcare expenses.
Childcare expenses are deductible against your income. The key point here is if you are paying a babysitter or an individual, get their name and social insurance number.
Okay.
And if it's a daycare center, just get a receipt from the daycare center.
And you've got moving expenses here.
Moving expenses is often overlooked.
And why is that?
Well, the thing is people don't think of it. People think of moving expenses as just hiring your U-Haul van. Well, if you're moving 40 kilometers closer to your place of work and had to sell your home and buy a new home, moving expenses includes the real estate commission on the sale of the old home, the legal fees on the sale of the old home. It includes the land transfer tax on the purchase of the new home and the legal fees on the purchase of the new home. And in the case of one client who sold a home for over $700,000 in Victoria, Vancouver, his total moving expense was over $36,000. At a 46% tax rate, that was a savings over $16,000.
Not bad. And on that $16,000 note, we're going to take a quick break. We'll be back with Stephen Chong, Chartered Accountant, talking with you about how to get ready for this year's tax return.